where we put you on the map. This is Ron Costa broadcasting live from the Mappable USA studios in Las Vegas, Nevada. And folks, today we're going to be talking about crowdfunding, some options for your business, and a bunch of other things too. We got a great guest, but before we get into that, let's introduce Vicky Hutchmala from the World Token Market. Vicky, how are you doing today?
I'm doing great, despite the fact that it's going to be, I think, 113 or something crazy today in Vegas. But nevertheless, that's why God created air conditioning. And so, hey, I'm fabulous. We have a new guest today, and even though we're talking one of our favorite subjects, blockchain and crowdfunding, we're going to be talking with a new person, and that should be exciting. So let's get started.
Excellent. And try to do the Vegas heat without air conditioning, which I have a little bit of experience in myself, unfortunately. But enough of that. Let's introduce Samson Williams. Samson is the president of the Crowdfunding Professional Association. Samson, how are you doing today?
It's a beautiful 92 degrees here in steamy, balmy Washington, D.C. So greetings from the swamp.
Yes. Well, you got the humidity plus the heat. We just have the heat here, supposedly, although that's not even true these days either. It's hot. Hot is hot, right? 117 is pretty hot.
Yeah, this is true.
Yeah. So Samson, we talk about crowdfunding all the time, and to talk to somebody like you who's really been a pioneer in this whole business. You were there from the start, it seems. You're out there everywhere in LinkedIn and all these other places I see your stuff at. Before we get into the podcast in general, can we get a little background on yourself and how you kind of got interested in this whole industry?
Oh, yeah, sure. So in 2015, a buddy of mine who I went to Florida State with for undergrad, he's like, hey, you should quit your job at Fannie Mae and come help me do this startup to raise money for mortgages and homes using crowdfunding. And I was like, what's crowdfunding? And so he gave me the back history. So in June of 2016, I left Fannie Mae, where I used to do evil things for the mortgage empire there, went to a startup. It was just basically the fastest way to burn $500,000 you could come up with outside of, physically putting it in the oven. But what I learned from that was the fundamentals of the Jobs Act crowdfunding and why, fast forward 5 years later, crowdfunding is on the precipice of changing not only the mortgage industry and the real estate industry, but also just the future of Main Street businesses as a whole.
It really has. And tell us a little bit about the Crowdfunding Professional Association.
So the CFPA, you can visit us at cfpa.org. We're here to advocate on behalf of the entire crowdfunding industry. So I liken it to, I'm going to be a fat David Stern in the sense that when David Stern took over the NBA in the 1980s, it was a young league. It was almost bankrupt, but now the NBA is this global titan of awesomeness. And so in the crowdfunding space, if you got into specifically Title III of Reg.A in 2016, the legacy platforms have paid the iron price to come to 2021. But just to give a point of reference, in July of 2020, there were only 43 FINRA-approved crowdfunding platforms or portals. Right now, fast forward to mid-2021, we have 68 FINRA-approved platforms with another 24 in the works. What that means is the size of the crowdfunding industry is growing. We've so far in the Reg.CF world, they've raised $239 million as of July 2021 through Reg.CF offerings. That's super important to know because last year, in the entire year, we only raised $14 million. Already to date, we're already up 100% over last year. And the most exciting thing about this is crowdfunding has a season. That season is when the most investors invest in the crowdfunding deals, and that season actually runs from September to December. So we've already surpassed last year's numbers. We're probably going to come up close to $500 million total just in Reg.CF world, which is an exponent hockey stick, because that means for 2022 we're on track to go over $1 billion raised just through Reg.CF, regulation crowdfunding. And again, that's just going to change the way Main Street businesses get funded.
How do you account
I think one of the reasons why that was so big was because in Reg.CF it had a lot of movement after the top level of raise was moved from $1 million to $5 million. Was that right?
Yes, and so that's one of the things that the Crowdfunding Professional Association, we're an advocacy group based here in Washington, D.C. That's what we advocate for. So we're constantly in communication with the SEC, with FINRA lawyers, and that's one of the changes that we advocated in 2020 on the onset of the pandemic was, hey, let's make it easier for businesses to raise money. So we had some pandemic exemptions that made it easier for businesses to raise up to $250,000. The other big changes that we'd been advocating for was the raise of Reg.CF from $1 million, the limit from $1 million to $5 million, the limit for Reg.A plus from $50 million to $75 million, as well as some minutia around blue sky laws, testing the waters that enabled you to use this thing called the internet and social media to advertise your offering. Because apparently in 1933, social media didn't exist, and therefore regulators didn't think, hey, we should make it so that Main Street businesses can engage with their customers where they're at. So the CFPA, we made those changes happen, and as a result, we have far more business owners who want to be portal operators to help other businesses raise money, which is why we anticipate, again, by the end of 2021, we'll have over 100 crowdfunding portals. And then, of course, the broker-dealers and DCs who are like, oh, my God, we have to compete with the customers to fund these businesses. Let us get in the game at a lower level, at a lower price point.
Well, and any time that you make things easier to use, especially a tool like this that's very valuable, when it's easier to use, more people will get involved, and then exponentially the crowdfunding industry will explode just because it's easier, and adding the social media aspect to it just took it to a whole different level. I would imagine that's
100%,
kind of,
Vicki.
Yeah. Anything that's
so,
easier.
Vicki, I want to tell you a secret that your listeners may not know. When you're doing a crowdfunding campaign, you're not actually raising money for your business. You're doing a marketing campaign for your business. So
exactly.
Most people get it backwards. They think that, hey, we're going to go out and raise money. I'm like, no. You're going to go out and market your good product or service to generate some sales, because revenue is the best capital in the world. And then as a tertiary offering, you're going to tell these folks, you love our business so much you followed us on social. Thank you for that. You love our business so much that you bought our good product or service. Thank you for that revenue. As a tertiary thing, you love our business so much that you follow us on social, you bought our product, you recommended us to friends, and because you love our business so much, you should invest in it. And that's what crowdfunding does. It enables you to actually ask your customers, your potential customers, to, one, generate some revenues through sales, and sales are always lovely, and then later say, if you love our business so much, invest in it. And this is why we see that uptick in crowdfunding, because I always like to say customers have more money than VCs. When this gets highly controversial, we can talk about this, but your customers have more money than VCs, and crowdfunding lets you connect through marketing directly to your customers. And that's why crowdfunding is, taking off.
And that's so interesting that you say that, Sampson, because Ron and I have been saying that for a long time in the podcast that we do, that yes, the crowdfunding and doing all of this is important, and that's a vital aspect, but you have to do the marketing. You have to spend the money up front with marketing before you even start thinking about crowdfunding, because without the marketing, you won't be successful with the crowdfunding.
100%. We cannot stress that enough. And so the other benefit of crowdfunding is with crowdfunding, so in quote-unquote traditional fundraising, you have four options. One, you can go to the bank and they will lend you your money at 12 to 18%, assuming you have $1 million in the bank. So that's not actually viable for the majority of startups. Two, you can do the venture capital route or the VC route. And whenever you put yourself on the menu, sharks love to eat. They're like, oh, yes, absolutely. We're going to put you on the menu and set the terms. So I tell people you might not want to put yourself on shark's menu. And then, of course, the other folks you can go to is angels. And we love angels. However, angels like to have shark-like returns. So I'm like, they might be called angels, but they're still savvy business folks. So you might want to think about your approach to them. And then that quote-unquote alternative fourth option is crowdfunding. And the craziest thing about it is you take your pitch deck, you file your SEC exemption, whether you're doing a Reg.D, a Reg.A plus, or a Reg.CF, and then you pitch. If you're only pitching to sharks and angels, to accredited folks, you're telling 96% of the population who sees your marketing, who sees your pitch deck, we don't want your money. And that's why I'm super excited about Reg.CF, because with Reg.CF, not only are you testing your go-to-market strategy, which only customers can tell you, and I tell people when it comes to investing, if someone's not writing you a check, they're lying to you. Not only do you test your go-to-market strategy, you also have a way of casting a bigger net because, and Vicki, just to keep this between you and I, this is the secret of crowdfunding, particularly with Reg.CF. Every investor needs to know the same data points in order to make a decision to invest, whether you're a shark, an angel, or the crowd. And this is where once you realize, oh, you're actually marketing your business, then it's like, yes, let's not just market it to 4% of potential investors. Let's market it to everyone, to all investors. And if the gods are kind to us, we happen to sell some of our good products and service and generate an exponent in revenue during our crowdfunding campaign, this is the most awesome feeling in the world.
Absolutely. You know, they used to say, or I guess they still do, that the best customers a business can have are the word-of-mouth customers. But when it comes to crowdfunding, why wouldn't you? It's like a no-brainer. If your customers love whatever your product or service is, that they're going to spend their money for it, then why shouldn't you thank them by letting them invest in your company? Because that's like, well, you know, best advertising is word of mouth. Best investors are your customers. It's just like a no-brainer to me.
No-brainer, 100%. Ron, let's put this on the map, these 4 bullet points on the map. And the first bullet point is customers have more money than VCs. Let's put that on the map. The next thing we want to put on the map is when you engage your customers via crowdfunding to be Investomers. We might not have used this term before. An Investomer is what your customers become when they invest in your business. They're called an Investomer. That third point we want to put on your map is then, Ron, we want to obsess over our customers. And because when your customers are your investors, it makes your investors extremely happy because everyone loves good customer service. Everyone loves feeling like, hey, I'm important. I have some skin in the game. I have some say. And when you engage your customers to be Investomers, they absolutely love it. And then the fourth thing, this is definitely we could put on the map, when your investors become extremely happy in your business because your investors are the same people as your customers. And that's why crowdfunding is not really complicated. We're going to go out and find customers because a business can have 2, 3, 4, 5 big sharks or whales on their cap table. And the data points tell us that you're going to spend half the money you raise on customer acquisition, meaning you raise $10 million from a shark, you're going to spend $5 million on customer acquisition. Versus, as Vicki said, when you have that word-of-mouth referral, it lowers your customer acquisition cost. It increases your brand loyalty. It increases the lifetime value of that customer. And then all of a sudden, your business is not only raising money, because often entrepreneurs, they get super excited, like, oh, my God, we just raised $5 million, $10 million. And I'm like, oh, my God, you have $5 or $10 million worth of obligations. Raised money isn't earned. You've got to pay it back. And so if you're engaging your customers as investors, you actually want to create that lifelong brand loyalty because ultimately it increases the lifetime value of your customers. We have some data points we're working on that. We're not quite sure what that is, but this is why when I say crowdfunding is changing capital markets, I mean this in every sense of the word.
Yeah. And when a customer actually buys from you, they're buying again. They're not just going to, just buy once. You're getting that repeat sale over and over and over again. Then multiply that by all the people these evangelists come and bring to your company, and you can see where exponential growth happens that way.
100%
Absolutely.
exponential growth.
And customers tell their friends. I tell 5, I love this product. I love this company. This is great. And so I tell 10 of my friends, and then they tell 10 of their friends. And not only do I love it, but I invest in it because I love it so much. And then your whole world of friends and contacts and what have you are potential customers to your business just because somebody liked it so much that they invested. It's exponential. It's infinite.
100%.
Yeah, that's great.
And we're going to pivot the conversation in a moment so we can talk a little bit about blockchain. But I wanted to just let folks know, if you hear someone, an institutional guy, a shark, an angel, they say crowdfunding jacks up your cap table, right? One, that is the biggest myth spread, because the entire point of VCs investing into early-stage startups is to take them public. And when you take a company public, you literally have hundreds of thousands, if not millions, of stakeholders, of shareholders. So if someone says crowdfunding is going to jack up your cap table, just know those sharks are greedy. Those sharks want to prevent you from having 10, 20, 30,000 investors on your cap table. But you want 30,000 investors on your cap table. That way, in a decade, when you go public, you've already got a 30,000 strong marketing army who have paid to be your marketing force. And that's going to have, again, that's going to help you with that exponential growth.
Exactly.
Yeah.
Exactly.
I totally agree with that. And before we get into this blockchain topic that we're going to go into next, I want to talk about this paradox of crowdfunding, in that investors, VC guys and angels, how many deals do they see on a monthly basis? Thousands, right? I mean, they see so many deals all the time, and they only pick one or two. So they're picking the best deals that they see on the table to say, yeah, I want to move forward with those. But those CEOs aren't dumb, right? So these CEOs who say, oh, my God, look at this. This venture capital sees 1,000 deals. Now he sees mine. He likes mine. Wouldn't that automatically make me think, why am I giving away my company to a VC guy? Why don't I just take this crowdfunding? I know I'm a good company. This guy just said, yeah, I love you guys. So why isn't this guy saying, you know what? Absolutely no VCs. I'm doing the crowdfunding route. Does that make sense?
So, what is the studio name that was that just closed a deal on Republic? They raised $2.99 million, $3 million bucks. They have 28,301 investors on their cap table, because their minimum investment was $100. Their maximum investment was $100. I call that shark report.
Yeah.
When you're a founder, an entrepreneur, and you set the terms, you can literally say, we're only going to accept a maximum of $100 because we want 28,000 investors on our cap table. We want 28,000 fans to be members of this, to own this business. And so this is where, again, crowdfunding, it's great if you want to set your own terms. And, of course, sharks aren't dumb. Angels aren't dumb. They follow the money. Some stats from 2020, 63% of investors into Reg CF deals in 2020 were accredited investors.
Yeah.
Meaning they're not on the hook for all 3 or 4 million. They're only on the hook for the 100,000, the 200,000 that they put in. The crowd, who are actual customers and will bring value to the company, they're on the deal. So this year, you'll see that, again, institutional investors, sharks, angels, they're back in droves. They're looking at the deals. They're loving the fact that the number one thing, if you ever see a company go on Shark Tank, the first question out of any of the sharks' mouth is, what's your traction? Mr. Wonderful, He's not cheering on Start Engine, will ask you, have you done crowdfunding? sharks know it's a metric for success. So if you're considering raising money, the banks are going to tell you no. Sharks have a 99% rejection rate, by the way. Less than 1% of folks who actually go for VC funding receive it. You should definitely consider crowdfunding as your most viable option.
Right.
You're correct.
So
all right, so let's talk about this blockchain now. Let's go into blockchain and crowdfunding. What do you think about those two? How are they interconnected?
Well, I want to be clear with folks that you don't have a blockchain business. You have a business that uses a bit of technology to do a digital thing. So your business is whatever your business is, right? The tool it uses to make the operations work better, it might be blockchain, it might be AI, it might be natural language processing. Whatever that piece of technology is, that's a tool. And so when I talk to blockchain, to quote-unquote blockchain businesses, they often confuse their business with the product that their business builds. So a product of a business that uses blockchain, it can be a token, it can be a coin, it can be an NFT or a non-fungible token. So when you have a business that uses blockchain to do a digital thing, that digital thing could be a token, an exchange, an NFT, etc. When you go to raise money, you're not raising money for that product. You're raising money for that business. And that's super important to understand because this is where you actually have to file an exemption, be in compliance with the SEC, with FINRA, so that the business is raising money. And then you explain your business use case, how you use technology, this novel technology, to generate revenue. We have to be very clear when we're talking about quote-unquote blockchain businesses. You get me so far?
Yes.
Oh, yeah.
Yeah. And now, how are these blockchain businesses doing crowdfunding? They're doing it the same way, right? They have to go through all their registrations and everything else, right?
100%, because, Vicki, this goes back to if you think you're a blockchain business, well, congratulations, you need to market your business. And part of marketing your business is how do you tell a consumer, a client, an end user of your digital piece of technology, why they should care about your tech and why they should care about using your tech. Because all tech works. Hey, all tech works. It's super great. It works. It does a thing. But how do you inspire people to actually download, access, or become subscribers to your tech? That's a business. That's where you're telling the story of the business to inspire folks to consider using your technology. And in the case of crowdfunding, they not only want to know about the business, they probably don't actually care about the tech, because that's how you make money. What they want to know is, are you going to make money? And so if you think that your blockchain business is, oh, we're going to make money by raising money for our token, that you're actually raising money for your product, not your business. And that's a different that when you're raising money for a product, that's not actually a business.
Well, right, and everything is relative. You know, your business, your marketing, your crowdfunding, and using the tools of blockchain to make it all happen. It's all relative, and it's important to choose the best tool to be able to generate the investor, and for the investor to make it easy for them to invest, and which tools are you going to use based on the product or the service that you're providing. And that goes along with the strategy that you created initially when starting your company. Well, I'm going to do this, I'm going to do that, and that's going to lead here, and that's going to lead there. And eventually I'm going to get to the point where I'm able to use the blockchain or tokens or coins or whatever in order to make it all happen. So it's all kind of relative, but it depends a lot, like you said, on what your business is, what your product is, and what your niche of investors is. Blockchain is just a tool to expand that niche.
Yes, and you still want to expand that niche. And as you expand that niche, you want to do it in a compliant way so that you're not in a love affair with, the SEC.
Absolutely.
For any reason, because you definitely don't want to be in a love affair with them. It's an abusive relationship, even on the best of days.
For sure.
No, that would not be
the regulators. Yeah, not that we don't love the regulators, but I just don't want to talk to you.
But that's why there's organizations that you're working with, Sampson, to make sure that the regulators, being the SEC and FINRA, to understand the concept well enough to create the regulations and the rules that make it work and also make it easy to use so that people don't want to go against it, want to embrace the regulations and the rules because it makes doing the whole process much easier. That's why it's important for you to do the background work.
100%. And so part of what we do at the Crowdfunding Professional Association is we do work with the regulators. Right now we're trying to help them come up with the definition of a stablecoin. That's a nuanced thing because we don't – first, what's a token, what's a stablecoin, what's a cryptocurrency? Because if it's a security, we want there to be bright line rules so that founders know that when they set up a business – and they quote unquote raise money. If it's a security, that's awesome. If it's not a security, let's make sure it's also not a commodities because the Commodities and Future Trade Commission, the CFTC, manages that. And when we look at the future of DAOs and distributed organizations and DeFi, decentralized finance, I tell the folks in decentralized finance, what you're saying is you want to raise money from the humans, from everyone. That is literally the definition of crowdfunding. And so there's some folks in the blockchain space who are like, oh, DeFi, it's amazing. I was like, yeah, that's crowdfunding. You're just calling that duck a squirrel, but it's still a duck. And so we want folks in the blockchain space to realize if you're going to go all in on DeFi, on decentralized finance, and on DAOs, you're trying to rewrite the history of crowdfunding. And so for a very simple explanation for crowdfunding, if you use the internet to ask strangers for money, you are engaged in some type of crowdfunding. If the strangers want nothing back from you, that's donation crowdfunding. If you're going to give them a T-shirt or a headset or some object, that's reward crowdfunding. If they are making an investment, if they're getting shares in a company, or if you're creating a debt obligation, that's investment crowdfunding, mostly called equity crowdfunding or debt crowdfunding. So when we talk about DeFi, just know if you're going on the internet to ask strangers for some type of investment, or creating an investment contract, that's crowdfunding. That's covered underneath regulation crowdfunding or Reg.A plus crowdfunding or some SEC exemption, because I desperately don't want founders who run quote-unquote blockchain businesses to, after the fact, realize, oh, my goodness, the FTC, the CFTC, the Consumer Protection Finance Bureau, they're all sending me love letters because that's going to just be an uphill battle for that entrepreneur then.
Right. So tokenization,
exactly.
security token offerings, and NFTs, they're all forms of crowdfunding then. That's what you're saying, right? They're all based on
100%.
blockchain, but they're all forms of crowdfunding. Right. 100%. Where do you see those markets going, by the way? You know, tokenization, this whole thing about the NFTs, that's all I hear about these days. You think it has a bright future?
NFTs are going to fade out, meaning it's novel technology. It's, I collect baseball, basketball cards, since the early 80s. It does have a place. Right now, people are super excited about the hype. They're learning. You'll see that level off. When we talk about tokenization, particularly in the real estate field, what makes tokenization possible, when you create an equity, you can call it, when you create a share, you can call it a token. What makes it a token is when there's secondary exchanges that enable you to trade it. That's an innovation of fintech, a financial technology, not necessarily crowdfunding. However, fintech and crowdfunding, they go hand in hand. Computers that most people just use to, swipe left or right on Instagram, that enable us to exchange data. And when you're exchanging data, this is where when you have ownership of a building, you own 100 shares of a building, or you call it tokens, that's fine. When you implement them on blockchain, it enables you to create that immutable distributed ledger. And when you think about blockchain, to make it super simple, blockchain is just like a group text message. I'm in this group text message with Vicky and Ron. They only see that my number is 954-303-2281. So while no one knows my name at the moment, you can figure out, hey, this 954 number, that belongs to Sampson. And so when you scroll up in this group text message, you can see I sent Vicky $10. Vicky sent Ron $5. Ron can't now say I have $200 million because you can scroll up and down in this group text message and be like, Ron, you got $5. Calm down. And so what blockchain does, it creates that group text message that's distributed. It's on everybody's cell phones in the blockchain world. We call the cell phones node. So everybody's cell phone. Every time you hit enter or put in a bit of data can be a picture or a price or some type of financial transaction, it gets time-stamped. And it's on a ledger because you can scroll up and down. It's immutable because just because Ron destroys his phone, the record still exists on Vicky and mine. And so when you're thinking, oh, blockchain, tokenization, it just lets us look at that group text message to say who owns what of this real estate project. And so this is an adaptation of fintech, of financial technology. And this is where you have people who say, hey, we're in these, again, we're just using this term as a group text message. We're on this exchange, and we can see who is trading, buying and selling what bit of ownership. That's literally no different than a very large group text message that enables you to filter out who's actively has the tokens or has the equity or the interest in the building. So I feel there's a bright future for tokenization. Just remember, you might call it a token. It's really just a digital PDF that says you own some fraction of a building or of a business.
Yeah, exactly.
Yeah, that's a fantastic analogy.
And I think a lot of folks, it's such a new world, blockchain and cryptocurrencies and tokens and everything, and I think people aren't educated enough yet to understand that when you say blockchain or you say tokens, it does not automatically mean Bitcoin. Bitcoin is not blockchain, and people need to understand the difference of investing in Bitcoin and investing through tokens into a company and owning a share of that company. I don't think that the knowledge is universal enough yet that people to understand, and that's why it's important for the regulators to differentiate between what this is and what that is and everything. They're kind of creating the wheel in terms of blockchain and its functions, and it doesn't fit in Bitcoin. And I get so frustrated because people think Bitcoin is blockchain or blockchain is Bitcoin, and it's not. But it's simply because they're not educated enough, because there isn't enough information out there. And everybody, Bitcoin is just like the big trend, and so that's encompasses everything. And it just makes me frustrated with that lack of knowledge.
Yeah. This is where I use the group text message analogy, because I have $100. I send Vicky $50. Vicky sends Ron $20. So in that group text message, everyone can see I only have $50. I can't claim to have $500 million. I've only got $50. Vicky, we can see the transactions that occurred. So Vicky, everyone knows Vicky's only got $30 left, and Ron, he's only got 20. So those are immutable facts. And so when you think of blockchain as a group text message, and again, the phones in blockchain are called nodes, it makes it easier to understand the black magic that occurred from the sense of the banking system, because there's no bank in between me, you, Ron, and the other couple of million people who I might send quote-unquote value in the form of money. So that can be like, oh, in this group text message, there's not a bank. We're just on the blockchain. I'm like, yes. And so the Bitcoin blockchain, it's the first blockchain. It's the easiest application of distributed ledger technology. However, it is not the end-all, be-all of distributed ledger technology or blockchain. And so I most often liken it to the internet. Go on.
I was going to say, Samson, who couldn't? Yeah, I was going to say, who couldn't relate to this whole group text analogy? I mean, everybody's in these group texts every once in a while where you get all these different things, and it goes on forever. And especially when you land in a plane, or your phone goes off, and people next to you are like, what's with the 30 messages that you got all of a sudden? But that's a great way to kind of understand in simple terms what I mean. I wish I heard this analogy a month ago. I mean, it's really, really clear right now, and I'm glad you brought that up. But I know we're coming off on a hard stop here. Is there a way where people can get a hold of you in case they want to get more information about your company, yourself, or the Crowdfunding Professional Association?
Sure. You can find me online, Samson Williams, Samson Williams. You can visit cfpa.org. So when I'm not working with the Crowdfunding Professional Association, I teach on blockchain, AI, machine learning, and the space economy over at Columbia University in New York. And when I'm not doing that, I teach blockchain, cryptocurrency, and the law at the University of New Hampshire School of Law. And the reason I came up with this blockchain is like a group text message. I walked into a meeting here on Capitol Hill, and the youngest person was probably 63. And I was like, And
there you go.
The most advanced phone in the room was a BlackBerry. And I was like, oh, wow. My goodness, this is going to be difficult. So I was like, Samson, screw all that. Because these are the decision makers for the federal government. And if they don't understand it, they're not going to sign off on it. So it was,
that's scary.
We don't care about the fancy tech. It's how do we explain this to the decision makers who also hold the purse strings so that they get, this is what they mean when we say it's blockchain. There's not the blockchain. There are many blockchains.
Right.
And
exactly.
Bitcoin is the easiest application of blockchain technology. Very similar how the internet, until 2017, the most streamed thing on the internet was porn. But it turned out you could do more with the internet than just stream porn. So too with blockchain. It's not just limited to Bitcoin. There's so many other things you could do with it, which all will lead us back to the future of tokenization, and which means crowdfunding.
Exactly.
Well, maybe we'll talk about that on our next podcast, Samson. I hope to have you on again. This was really interesting, really informative stuff. So thank you once again for taking the time out to talk to us on our audience. And Vicki, before we go, I have one word for you. Investomer. Investomer.
Yeah, we learned a new word, Ron.
That was classic.
Yeah,
I loved it.
It's perfect. It's perfect.
All right.
It's perfect.
All right, folks, you're listening to the Mappable USA podcast.
I just want to say one thing that we need to reiterate as often as we can. Samson, this was an excellent podcast. You gave us a lot of information and got us to thinking in a different way. But to all of our listeners, it's very, very important that if you're thinking about crowdfunding or you're thinking about blockchain or tokens or whatever, you have to find somebody like Samson who can help you to understand it, who can advise you and consult with you so that you do the right thing for your business, you do the right thing for how you want to raise money or what you want to do so that you don't waste time and you don't waste money. You need the professional advisors and consultants before you ever take a step so you know what steps to take. And that's all I have to say.
100%.
All right. So Vicki, I can close the show out now. Is that right? Can I do that now?
Yeah. Now you can say good. Now you can say goodbye, Ron.
Okay. All right. Okay, folks, you're listening to the Mappable USA podcast at mappableusa.com. Just go to that homepage, scroll down. You'll see all our syndication sources. Just pick the one you like best. Subscribe, and you'll never miss another one of our episodes. If you want to be a guest today like Samson was, there's a guest tab. You click on that, fill out the form. We'll see what we can do about getting you on the show. And if you like what you heard today, send us an email at info@mappableusa.com. or just leave a comment on whatever page you're listening to this on right now. So thanks for listening. Thanks for your support. We'll be at you next time with another Mappable USA podcast. Have a great week, everyone.